what you want from me. You want someone to be. Your reflection, your bitter deception, setting you free. So you take what you want, then leave. Who made you like this? Who encrypted your dark gospel in body language? Synapses snap back in blissful language. Tell me you met me in past lives, past life, past what might be eating me from the inside, darling. Half algorithm, half deity, glitches in the code, or gaps in a strange dream. Tell me you guessed my future and it mapped onto your fantasy. Tell me into your mannequin and I'll turn you into my puppet queen. Won't you come and dance in the dark with me? Show me what you are, I am desperate to know. Nobody better than a perfect enemy. Digital demons make the night feel heavenly. Make it real, 'cause anything's better than the way I feel right now. I can offer you a blood-clear paradise. Diamonds in the trees, pentagrams in the night sky. Lipstick, chemtrails, red flags, pink nails, with one eye on the door, other eye on the rail, other eye following a scarlet trail, and the last few drops from the holy grail. Now rose gold chains, ripped lace, cut glass, blood stains at the dollar. Please just don't ask me. The first to the feast, let's choke on the past and take to the broken skies at last. Diamonds in the trees, pentagrams in the night sky. What you want from me. You want the same. I was me. My redemption, eternal ascension, setting me free. So I'll take what I want, then leave.
All right, guys, what is going on? What is good? What is good? One second, 1 second. There we are. Where's everyone at, baby? Where's everyone at? I think we have more people on the morning session today than we do the afternoon. Crazy times, folks. Crazy times. The equal lows at 61.40.5. I gave you that earlier this morning as well. I pointed out those lows down in here. That's been met too. That has been met too, chat. This to me was a second leg. Although I will say this was during lunch. Ooh, excuse me. Second stage delivery lower. Interesting. Interesting. But what's good, everyone? Jordan D, welcome back. Mason, Naruto, welcome back. Willow. Need a coffee mocha? Yeah, I probably need one too. Or another energy drink, to be honest. What's good, Bazell, Convicted Capitalist, Nikki, Victor, Eberneth, 2020, Electric. Yeah, man, it's been a fun day, huh? Has it been a fun day for you guys? Did y'all enjoy the AM session this morning? Did you enjoy the AM session this morning? Were you studying price delivery today? Were you? Or were you just fucking around? It's alright if you fucked around. I do it. I do it, chat. I do it. Was a good shame. Mason and Remy had a good morning, or had a enjoyed today. Convicted and Nikki. Yeah. It's more fun when you know what you're looking for, isn't it? Like when you know, like, oh yeah, there's equal lows there, or there's equal highs or low resistant highs, like we were looking at on Nasdaq this morning, right? And you remember we watched that trade up there, right? How fun was that, watching live price? Now, I will tell you though, we got a buy model and a sell model, right? Buy model to a sell model. So if you ever want to ping pong the market, now you know how to do it. Buy model into a sell model. Have y'all ever noticed that? That's one thing I don't think I taught you. That's one thing that I think I left out in the masterclass video. Not just the fact that you could have a small time frame buy model inside of a larger time frame buy model like Nasdaq this morning, but they're connected. So you could have a buy model, and that TP of the buy model could be the manipulation move of the sell model. Did you know that? Did you know that? Are you starting to put the pieces together, chat? That's all that I do here. I give you pieces. I gave you pieces, and then I give you how to put them together, and then you go, oh shit, This shit is crazy. What's good, Juan? What's good, Natasha? A lot of people on today. A lot of people on today. You gotta love it. But yeah, so let me know in the chat. Matter of fact, I'll just do a fucking poll. What's good, Rob? I'll just do a poll. Did you know MMXMs are connected? Well, they can be. I'll say that. There's your question of the day. Did you know MMXMs can be connected to each other? Did you know that? Or in your studies? Because I know you study, right? Did you come to that conclusion? You ever looked at it and went, the manipulation here was the take profit phase of the buy side delivery, but then it turns around and does a sell side delivery. So one was connected to the other, like a chain link. And yeah, Jordan, I mean, that's some sauce so far today. There's London's low for ES right there, right here. London's low, boom. Delivered when? 12:10. It delivered at 12:09. Jordan. When did price run liquidity? London's low, 12:09. Isn't that inside the 11:50 to 12:10 time window? That doesn't put a smile on your face. Get the fuck off my YouTube channel. Unsubscribe, okay? If that did not put a smile on your face, unsubscribe, because I don't have a fucking thing for you. Today was so fun. Today was insane. Was it not? Too much fun, chat. Too much fun. Anyway, let me get back to what I was saying. Let's talk about NQ for a minute. Okay? Let me talk about NQ for a minute. So, let's do this by hand. Okay? Let's well, I'm not going to print off the chart, but let's do this from a naked chart. Okay? We're going to go from no markups to an entire ensemble of markups. All right, so let's start with our equal highs or low resistant highs. We're going to start with that. Okay, if you want to follow along, we are on the Nasdaq, right? E-mini Nasdaq March 2025 contract, 5-minute time frame. So if you want to open a new tab, go over to TradingView, or if you have the TradingView app, you could minimize the YouTube, pull up TradingView and go along. All right, you can tab, or if you have multiple monitors, you can do that. However you want to follow along with. All right, but let's do it. Original consolidation, equal highs, right? So we definitely want to have that level on our chart, 22,058 and a half. Well, since this is now a hindsight study, we watched that live this morning, but now since this is a hindsight study, how did we get there? How did we get there? We made a low, we made another low, we made a third lower low just prior to London. Okay? So, because we got that lower low here, sort of by itself, there might be something on a higher time frame here, but I'm just sticking to the 5-minute for a second. We have a low, right? A lower low here. Notice that wick below it, wickage. We trade higher, break of structure. I know a lot of you guys love that shit. We end up trading lower. We don't make a lower low, and we rally off of it. So this ends up being London's low, and excuse me, since this was manipulation, as always, chat, what comes after manipulation? The low risk buy. Right? So after manipulation is the low risk buy. So we'll label that. I'm just drawing a box here. I'm not drawing it from anything specific concept or anything. I'm just saying the idea. Manipulation, low risk buy. We do consolidate here, so that, you know, by definition would make this the first leg of accumulation, even though it dips back into this. Okay. Rally off of it. We end up trading back into it, and this ends up being our second stage to go higher, or a second leg to go higher. And I know it's a little bit warped. Just work with me here, okay? Low risk buy, first stage, second stage. We on the same page? So, by looking at it this way, and we'll do a big ass curve here too, because that's really what it is. Right? It is a buy model. From the highs to the opposing run on liquidity, and with that being the low. We all good? Consolidation, distribution, redistribution. Again, it's not always going to be picture perfect. Sometimes it'll be warped. You know, sometimes the consolidations last a little bit longer, or they're a little bit prolonged. But you could say distribution, redistribution, manipulation. Okay. So this here, right? Market maker buy model. Now, we're going to come back to that. But now when we go back to a naked chart, so what all we did was cover the eyeball, right? You might not be able to see that on your screen, or can you? Yeah, right above my face here, this button, right? So we can have everything on our chart. We press that Illuminati eye, bam, everything's gone. Everything's taken away, okay? So when we look at current price, right, now we can see the low risk buy, okay? This is the confusing part for some people, and this shit is hard, okay? I didn't learn this shit overnight. Trust me, it was not an overnight thing. The low risk buy here creates low resistant lows for later. Okay, that's what happened. Our low risk buy originally ends up becoming a target for the downside. But now how are we going to get there? Remember, after manipulation is the low risk buy or sell. So if this is original consolidation, equal highs, low resistant highs, whatever, and we trade above that, okay, and obviously the market did what? It traded off of that. Some people would say, oh, it rejected that level. Whatever verbiage you want to use, I don't care. But it trades immediately off of that, right? Just almost no deep retracement at all. There's a small imbalance right here, though. Right? So after manipulation comes what? You may not look at this 9 o'clock candle. You might not look at that as a low risk short, but that's a low risk short. Okay. This you might consider the low risk short. In either case, I don't think you're wrong, but if we, philosophically speaking and technically speaking, if we were to identify clearly what exactly is a low risk buy, to me, it's the low risk buy or sell is it's low risk, meaning that it should be a very, very tight stop loss, a very, very small range. That's my opinion. Okay. Again, who the fuck am I going to call to verify? Who am I going to call? Right. So to me, because look in here, we get a fractal high. And I know that candle doesn't have a wick on it, but that's still a fractal high. The candle in the middle has a lower high on the left and a lower high on the right. So we get a fractal high. That candle closes, and then this candle opens, trades higher and lower. So that's 9 o'clock above, shorting above the hourly open, shorting above the 15-minute open. Wink, wink. That's your low risk short. Sells off. Then we get a level, or this is our first leg distribution. So this becomes what? Second leg distribution. Now, mind you, the first leg actually takes the low here. But remember, this was at, let's say, 10 o'clock. Okay. 10 o'clock for ES. What's it doing? It ain't below the lows yet. It had its first leg. It hasn't had its second leg yet. So if ES rallies, NQ will probably rally with it. That is not a stop run. It can be, but I would say 8 to 9 times out of 10, such a small wick below a level is usually not a stop run. We want to see something pronounced. We want to see some shit like this. You see the difference here, chat? Drop some ones in the chat if you see what I'm saying. That run below the low, okay. The run above the highs here. Okay. It, to me, for Nasdaq, it's not about a specific number of points. I mean, it could be 10, 20, 30, you know, something to that effect. But just eyeball it. Look at the fucking difference. A couple of ticks here, of quite a few points here. There's a substantial difference between this run and this. So this, to me, right here, that's not a stop run per se. Okay, that's not. So if ES will follow suit and Nasdaq is, if it's weaker, if the strongest one is going to trade lower, the weaker one is going to do what? It's just going to shit the bed. It's going to that low and beyond it. So that's why I'm saying, on, again, still on this idea that market maker models can be connected. I don't think they're always connected. I might be wrong, but since they're a little, there's some level of subjectivity here. They're subjective. I don't know if they're always connected, but what I do know is it was damn near 100% connected today. Buy model and the profit taking phase of buy side price delivery was the manipulation. Okay. Low risk short as well. And then first stage was here. Okay. And then second stage was here. Right. You notice anything about this imbalance right here? You notice anything about this one as well? Do you notice anything? And again, this isn't even the 1 minute, this is a 5 minute time frame. But what do you notice? What do you notice about that one and about this one? Right, Jordan. That first one was left open. It taps into it a little bit. That's what you want to see. That is a weak market. Same thing with longs. Same thing we saw today on the 1 minute of Nasdaq. Remember this from this morning? Right here? You see how it barely rips into that? It barely traded into it and then off of it. That's what you want to see. That's a massively bullish market. Okay. The same way that barely trading into it and selling off is a very, very heavy market, very, very weak, right? So we see that continued sell off. We get a retracement. Why would we do that? Well, Chad, I don't know everything, okay? I say that a lot. I don't always know. But what I do know is before the market goes higher, or excuse me, before the market goes lower, it goes higher first. Why would it do that? Well, anybody who shorted above old highs, anybody who caught this move going lower, guess what? At a new low, they're in open profit. So where are their stops going to go? Recent highs. Market trades up for that. Then that liquidity is absorbed, sell off, not taking the low yet. We come back. Why would the market do that? Before it goes higher, it's going to go lower first. And in this case, before it goes lower, it's going to go higher first. So that's why I said, what did you notice about this imbalance? It stays roughly about halfway open. Roughly. And I mean, unless you included that, which that lack of wick right there, you know, if you want to include it, I guess I wouldn't, but either way, that upper half majority is left open, and then we get that continued sell-off. Okay. So I'm going to leave. Sorry. I'm going to do. It's not very clean. It's hard to mark up, like, because we don't consolidate. The market's so heavy, it doesn't consolidate and then run lower. It just shits the fucking bed. It's so weak. But what I would say is this. That old level of accumulation became distribution, didn't it? See that? All you gotta do is stretch it over. Now, I know that's a fat ass range. I get that. That's a big ass range. I get that. But remember, old distribution becomes accumulation, and old accumulation becomes distribution. Original consolidation, accumulation, reaccumulation, manipulation. Reaccumulation becomes distribution. I know that's a lot. It's a fucking mouthful. I get that. There's your sell model. Okay. I know it's a little weird. I know we're colorful. I don't know how else to explain it to you without showing you. Buy model first, then we marked up the sell model. Okay. But are you starting to see shit for what it is now? We're just going to overlap it. Okay. We're just going to do it. We have to. There's no other way of doing it. Original consolidation, manipulation, low risk short, first stage, second stage to go below the lows here. So we got a buy model into a sell model. Now, let's pause for a minute. How else would you explain it to somebody? How else could you sit there and teach a person some shit like this? How there's every single stage, right? There's characteristics of every single stage. There's the characteristic of time as well. There's characteristics of it was bullish, now it's bearish, or it was bearish, now it's bullish, right? Trying to teach somebody that there's levels of liquidity, that you might long this now, but that's going to be a target for shorts later. How do you get that? How do you get somebody to understand that? You know what I mean? That's difficult. How do you teach somebody that a buy model, once you learn that the buy model can also be half of the sell model too? That's hard, bro. That is, if you ever become like a mentor, dude, if you ever become like a teacher, YouTuber, whatever, this shit is hard, man. I hope I do a good job of giving you guys the information. You know, feedback's always appreciated. I mean, you either like it or you don't, but it's hard stuff, dude. Right? It's hard stuff. I'll show it to you again. I used to show you this a lot. This is my own version of the market maker buy model. It says it right there, buy model. Consolidation, distribution, redistribution, liquidity, low risk buy, first stage accumulation, second stage accumulation, seeking opposing liquidity, right? And the sell model is the exact opposite. But can you see? Well, I can't really. Let me think about this. I don't know if I can do it. No, because it's all fucking scrunched up. Something like that, where you're putting them together. The redistribution becomes the profit-taking phase of that end. And that, in turn, becomes something for later. So now it's like a fucking wave. Does that make sense? Which is weird. It's so weird. But this is how the markets operate. From buy model, and the buy side of the buy model, right, is utilized for the sell model again. It's very, very complicated, but that's exactly what you see here. Appreciate that, Mason. And good job, Lee, right? I'm proud of you. Oh, shit. Getting a phone call. I swear, nobody calls me outside of the time window that I stream. I only stream an hour a day. But everybody wants to call me, like, during the only hour I want to be left the fuck alone. Shit's ridiculous, man. I can't fucking win with these people. I can't win with people. When you are drawing an imbalance and see candle with no wick, you extend it to the closest wick of the next candle. I think you're referring, this was I know you asked a few minutes ago. I think you're talking about this, right? I've seen some people do it. I look at it that way. Some people will extend it to that following candle. Now, part of me believes that it doesn't matter, because there's only like a couple of points of difference. Now, the sniper precision in me says, no, you need to figure it out. I don't know. Again, who am I supposed to call to fucking verify this, bro? Who do I call? Who is the authority that's going to tell me, yes, it's this one, or yes, it's that one? Who? I don't know. I would just go with this one. But the idea is the same. It's all about getting in sync with price delivery. It's all about, where's the market going? Let's get in on that. And that's what everybody wants to know. That's the number one question that everybody wants to know. Where's the market going to go? And why do you think I gave you that idea of find the liquidity, trade in that direction? We watched that this morning. I also told you about the equal lows on ES. Where's the liquidity? Trade in that direction. You could have made money going long today. You could have made money going short today. You could have made money doing both. I don't always do that. I hardly ever trade in both directions in a day. I'd rather just take one good trade and then piss off. That's what I'd rather do. But either way, find liquidity, trade in that direction. Oh, well, John, is bullish and there's equal lows. Right. Well, I don't want to long that. Okay, well then fucking don't. Wait for liquidity to be met, and then wait for evidence of an opposing reversal. I mean, look at it. I think that was this morning. What was it? The second half of this morning, I taught you that almost every single time the market gives a reversal, it almost always gives you an opportunity to get in for the reversal or to get out of a current position. Do you guys remember that? Drop some twos in the chat if you remember that from this morning. Yes, John, you talked about it. You showed us that 1, 2, 3 formation lower and that 1, 2, 3 formation higher. Some shit like this, right? Lower, and then a retracement before the move. And then you saw the inverse high, high, higher high, breakdown, one more retracement before shitting the bed. Right? So the opportunities are in the opposing direction of your bias. Meaning if you're bullish, you want a long on the way down, which is here. If you're bearish, you want to short on, not financial advice, I look to short on the way up to go down. Y'all remember that? Now, again, we're looking at hindsight information because the markets have printed candles all day. Even as I'm speaking, candles are printing. But I'm going to counsel you, okay? Take this information. All right, John, I get it. If it's going to go lower, I want to short on the way up. Okay. Look at ES today. And I gave you this morning 6,140 as a potential downside objective. And I told you that the markets go higher to go lower. What do you think I highlighted right here for you? A little bit earlier. This is, this was during lunch. I don't really trade during lunch. So, Cameron has obviously made that his observation known that price delivery during lunch recently has been very clean. I agree with you. Maybe not every day, but I agree with you. Lunch has been fairly clean. The second leg or the second stage is going to be the fastest, more times than not, the fastest move. You know this already. First leg can be fast. Second leg is usually faster, right? So we get that up movement here, all the way back above the old high. Okay, not a big deal. That movement here, that created that imbalance. That's a big deal because we trade into it. That could be a short. Stop at this high, fractal high, or the stop could go to the high end of the imbalance, right? I know I don't talk about stop loss placement too much. I've got videos on that. I don't feel like I need to harp on that too much, but some of you still might know. Where does my stop go, John? It goes to the high end of the imbalance or at the fractal high. Okay. That could be a short. Now, in this case, you would have taken some drawdown. You would have been, shitting pancakes for, 30 minutes. Okay. I understand. Been there before. What happens right here? You tell me, chat. What happens as soon as this candle closes at 11:25? What happens? We got up candles that got what? Traded through. Right, Mason? A shift in price delivery. Again, this isn't even a 1 minute time. This is just a 5 minute. I love the 1 minute time frame. I think it's the best time frame. I don't give a fuck what Twitter says because they're stupid. Okay? 1 minute time frame is goated. You can't trade the 1 minute. You can't trade any other time frame. Period. Because price is fractal. How did we get here? High, low. Well, the low is technically here, but body-wise, the low is here. Higher high. So that makes this down candle what? A potential mitigation. What do you see right here? What do you see right here? Price trades up, into it, off of it. Into it, off of it. Opens higher. What's that right there? Jordan D, what's that right there? 11:45. Bam, 11:50. 11:50. 1150. Where's Ricky? Right? Ricky talks about 1145. 1150 is here. When do we get our pronounced candles? Not at 1145. We get pronunciation at 1150. And then 1155 runs the lows. Oh, he's at that convention? Nice. Yeah, see all my boys on the flyers and the like posters and stuff. I never got one of those, but I'm proud of them though. That's cool. But I never got a goddamn thing. Anyway, the idea is this mitigation is part of what? The second leg. If this was our first leg and this is our second leg, what is this in here part of? That's part of the second leg. So you would have been trading. You would have been trading lunch, and I'll let you decide if that's for you or not. But this second leg, right? That mitigation is part of a second leg, and it's just prior to the macro. So that means what? The macro should deliver below the lows, and it does. That, my friends, is time price context. And that's how you're going to take trades that you would have never thought was even fucking possible. Like with what I did on Wednesday, capturing the day's range. What did I do on the week for SPY? I caught the entire fucking week. I saw a dude on Twitter post the other day. He caught like, I think it was 19 ticks. There was a few points on Nasdaq. I caught the whole fucking day's range. Who should be bragging? Well, it shouldn't be me. I should be practicing what I preach when it comes to being humble. But it's hard, man. It's hard when you take such elite entries and almost nobody's on your level. It's fucking hard to stay humble, Chad. It is. Okay? But I'm teaching you how to do that. On a naked chart, you might think, because even like, I have respect for Dodgy. Don't get me wrong. Dodgy's cool. He's a young guy. He has obviously way more followers than me. Way more YouTube subs than me. But every day this week, he's like, oh, this is a shitty day. This is a shitty day. Oh, inversions. Oh, there was no inversions today. I caught Dow's whole range on Wednesday based on an inversion. It's there. You just got to look, broski. What do you mean today's shit? It's not shit. How is it shit? If today was so shit, I would have came out this morning on a live session in front of 40 of you. And I would have fallen right on my face. Oh, it's going to go higher. And it would have rocked lower. And I would have been wrong. But I wasn't. Nasdaq did go higher. And eventually, ES did run the lows. How is today shitty, but yet I'm still so spot on? Explain that. Explain that. Manuel, it's not even understanding the markets like me per se. I'm literally giving you guys the exact tools that I use to step out in front of you guys and call live price. I give you trade recordings. Sometimes they're real, sometimes they're demo or paper, whatever. Right? I recorded the most recent recordings have been like combine trades to show you that you can pass a combine. Yeah, Lee Brett, I agree. I should pin that actually. That's funny. But no, it's so true. Just go on Twitter. Go all over Twitter. Oh, this week sucks. Today sucks. No, you just don't know how to trade. Or your understanding is so limited that you can only do certain things. Every stage of a market maker model has its own unique characteristics. The low risk buy offers the highest RR. First stage accumulation, you might see some drawdown, you might see some consolidation. The second stage or the second leg should be faster. The first imbalance and reversals should be left open. Fractal highs and fractal lows are good stop loss placements. That the last 30 seconds alone just shits on majority of the courses out there. Come on. If the market's going to go lower, it's going to go higher first. Buy my $5,000 course. Yeah, fuck you. You know what I mean? Sorry. I woke up early today, chat. I'm a little bit tired, okay? I'm not always professional when I'm tired. But I get so excited about this because it's like, bro, you know the concepts. You know the order of models. You know where your stop goes. You know where to enter. You know if you're going to short, you long on the way up. Like, you know to manage your risk. What else is there? You let me know. What else is there? You have all the tools you need to pass a combine. A lot of you have passed a combine. And I made it look easy on Wednesday. I made it look easy this morning too. Now, mind you, one could argue that I was a little bit, you know, I wasn't as precise because what happened was I pointed out this 831, which if you didn't know, and if I didn't tell you this morning, that was the first presentation. And that's why I said that first presentation could become an inversion, or that this I was predicting should be an inversion. And I had said this looks like a breakaway imbalance, and I was wrong. It did come down to the supposed breakaway. It absolutely did not respond from the first presentation, but it did hit the lower imbalance and then traded up to the levels that we outlined beforehand up here. We saw that live. It literally spiked up there instantly. It spiked right there. And we talked about how this is where that image from earlier, that draw, excuse me, the drawing earlier came from. 1, 2, 3, go. 1, 2, 3, go. How hard is that? A 5-year-old could do that. 1, 2, 3, break free or some shit. I don't know. Whatever you want, man. Whatever you need to do or say to remember it. But it's not difficult. Okay? If I would have taken the inversion, the stop would have went to the low end of this imbalance anyway. So I would have taken some heat, and then I would have been in, not just in profit, but TP within less than 3 minutes, altogether in 3 minutes. 3 fucking minutes. 3. You know. And they say, oh, day trading. Oh, you can't day trade. Okay. Jordan, I'm not really sure what you were responding to when you said, if this was 2022, I would have said the same thing, stay locked in, pays. What were you responding to when I said that? I'm kind of all over the place today. I usually am, but I don't know. You guys seem to, you keep coming back, so I feel like you guys like it, I guess, or at least tolerate it. Oh, how there isn't a trade today. There was at least, bro, I could count at least probably 10. I could probably count at least 10 trading opportunities. Minimum. Would you like to know what they are? Drop some 2s if you want to know. It will obviously be a hindsight study. But do you want to know what those 10 are? Or would have been? This is why streaming for me is so easy. We can talk about anything. There is so much shit we can go over. We could be here for 12 hours a day for the next decade. There's so much information that goes into one day of price action. One single day of price action, you could study for like a week. Easily. So what do you think a week's worth of data would give you? Do the math, chat. Do the fucking math. Okay. Now, before we do this, obviously there's a difference today between Nasdaq and ES. There's subtle nuances. ES was stronger. ES was stronger in the morning. NQ was weaker for the short. So ideally, it would have been better to long ES or whatever. So what I'll tell you is, if you would have stuck to the rules that I gave you of not shorting when there's equal lows, okay, fine. We'll go with that. I pointed out the equal lows today. So if you stuck to the rules that I gave you in that top 10 smart money trading, whatever the fuck, okay, then instead of longing with the equal lows, if you're only going to short, then that's what will limit the scope to. Lee Bright watches YM for the dev. YM's been so ass for like the last couple of years, but every once in a while I'll slap it around. Like Wednesday. I always got to throw in like a Dow trade every once in a while just to let Dow know who's the real daddy. You know what I mean? All right. So let's assume for a second that you don't short you don't long with equal lows. You like the rule, you trust the rule, it saved you from getting your ass clapped. You're like, okay, John, I'm never, ever again gonna long with equal lows. Okay, I'll give you that. You will limit your opportunities if you do that, but I think you'll save more than you would have by breaking that rule. Okay, no problem. We get manipulation here. We get a rally above an old high. Now, NQ does follow suit. YM does not. Now, if we... Oh, and Dow did end up taking those highs. That's crazy. Anyway. Now, mind you, if Dow is lower and ES is higher and NQ is higher, why would Dow not be higher? Because that is manipulation. ES, Nasdaq, that's distribution. Thank you, MK. I appreciate that. That's the profit-taking phase of a buy model. They're going to distribute above equal highs. So that's why they're going to take it up there. Smart money is going to sell and short above old highs. So based on knowing that, and that's not new unless you're new here, but I've been talking about that for like the last half decade. Okay. So by definition, shorting above old highs, that technically is an opportunity. Okay. So that would be one. Just shorting on the way up. 56. What's 56 plus 5? 61? Any math geniuses in here? 56 plus 5 is 61. Okay, where did we get that level from? Because whenever you have an old high, some of you are going to get nostalgia now. Go back to what I taught you almost 2 years ago. On ES specifically, there's a PDF I dropped on that many years ago too. I told you how to measure manipulation on ES. And what did I tell you? Take an old high, take an old low, add or subtract 5, 10, 15, 20 points. Did I not do that? I did. So technically, by the information I've already taught you, that should be a short. So that's opportunity number one. I usually don't do that anymore. I've always been vocal about that, right? Shorting above old highs. Some people call this the turtle soup short or the turtle soup long, but the turtle soup based on Linda Rasch and Larry Connors or Lawrence Connors in the book Street Smarts, that's based on a daily time frame, based on a high or low in the last 20 days or whatever the fuck. Intraday, that isn't really, it's not the same, but that's neither here nor there. That's the first short, is above old highs. The second short is what? The candle right after that. That would be what? The NCE. Next candle entry. Oh yeah, John, you talk about that shit all the time. Right. So the candle right after would be 2. Manipulation, as soon as that candle opens, that's a short. Ideally, you want to wait 1 or 2 ticks higher to short. Stop at that high. That's opportunity number 2. And give me a second, chat. I'll read you in just a minute. We're already at the end of the hour. Oh my God, it's been an hour already? You guys let me talk way too much. All right, 2 opportunities there. Market trades lower. Okay. Now, I'm not even sure, to be honest, what we even retraced into. I wouldn't short that imbalance here, but technically that is an imbalance on the way to opposing liquidity. So we'll count that as a short. Would you have taken drawdown? Obviously. Was that imbalance even respected? No. But you don't know if it's going to be, if you short as the market's going up and you're not waiting for the candle to close, you don't know if it's going to be respected or not, right? There's some level of predictability here, right? You're forecasting, you're foreshadowing, you're predicting the future, okay? Not reacting. So assuming an imbalance on a 15-minute time frame, that could be a short. Okay? That could be a short. Stop at the high, or this high here, the fractal, this fractal here, the high right there. That could be a stop. Would you have taken drawdown? Yes. Would it have hit your stop loss? No. Would it have hit your TP? Of course it would have. So that's 3. Going back to the, so we'll just put that right there. Okay, you would have been shorting that right there. Market trades lower, imbalance here, as I stated earlier. So as soon as we trade in, this is where all the opportunities are about to add up. Okay, this is where like you're about to be like, what the fuck, John? That candle right here is number 4. Okay. Drop some 4s in the chat if you guys are following along. If you're understanding exactly what I'm telling you. That candle, this up candle, trading just above this candle right there. 150.75. 1 tick above this candle. 1 tick above that. Bam. That's the short. That's the short. Okay. Drop some 4s if you guys are with me. Shorting above old highs. Measured move. Next candle entry, NCE. Number 3, there's no imbalances on the smaller time frame, which is why I zoomed out. Okay, that's why I zoomed out to the 15. All right, because there's no imbalances in here, none whatsoever. There's not even an inversion up here either. That's crazy to me. But anyway, that's number 4. We trade into the halfway point of this imbalance. Right? That is number 5. Okay. Now, again, these are just my opinions. Do I always trade like this? No. Okay. That's number 5. Shift in price delivery. So that up candle, this up candle trading up and into these 2 up candles together, that could be number 6. Okay. Now, trading view, it's like blocky, it's weird. So it's not going to be exactly on top of the candle how I want it, but trading view in their infinite wisdom. Okay. Now, again, as stated earlier, that candle also traded below the down candle. So if you waited instead of for the up candle, you picked the down candle instead as a mitigation, that could be number 7. Okay. So I'll just label the mitigation. Okay. So the up candles, that's 6. The down candle as a mitigation, that's 7. Okay. And any of these other candles after the mitigation, 1150, that's a time-based entry. That's the mop, remember? Mop. What the fuck are you talking about, John? Mop? Yeah. You're going to clean up your fucking act and get your shit together. And mop is the macro opening price. Okay? It's a time-based entry. So 1150 shorting above the open of the mop, that's 8. That's 8. That's why I told you in here, as part of your second leg, that's where all the opportunities are going to, not all of them, but a lot of them. Old highs, next candle entry, higher time frame imbalance. We didn't even go over fibs, right? Lazy traders entry. Low end of the imbalance, 4. Midpoint, 5. Up candles, post shift in price delivery, 6. Mitigation, 7. Macro opening price, 8. That's at least 8 opportunities just to short. We didn't even talk about longs. That's crazy. There's no opportunities today. Are you joking? Are you trolling? Because that's exactly what it sounds like. What do you mean? Let me put it to you this way. Scrunch this up. Let me put it to you this way. There is, are you ready for this? There is an entry, okay? Follow me here. Don't miss this. This is going to be the biggest key. And this will eliminate FOMO forever. Forever. You'll never have FOMO again. If you miss a concept, if you miss trading it as the candle is forming, just wait for the candle to close and trade the very next candle. That's the essence of the NCE. It's a next candle entry. It's a time-based entry. So if you wait for the concept to be respected and then get in on the next candle, that's where you're going to get low drawdown. Immediately your direction trades. If I may, if you guys will allow me, I mean, I'm streaming for free. I would hope so. If you'll allow me to go back to Wednesday's Dow trade, what did I do? Waited for the shift in price delivery after a 1, 2, 3 formation, traded long on the way down, right? I didn't wait for, or I didn't get in before the shift in price delivery. I waited for that and then got in at the next candle. Does that make sense? So now I'm going to show you what I'm talking about. And this is going to be weird. You're not going to understand it. You're not going to trust it. You're going to be like, John, what the fuck are you smoking? Because that is absolutely absurd. That's okay. I'm not smoking anything. I might smoke a cigar later, but I haven't smoked anything in quite some time. If you look at the second leg here, okay, this is going to literally give you something to study. And I promise you, some of you are going to think it's fucking stupid. And some of you, you're going to smile ear to ear because it makes so much sense. You remember I showed you the other day? Let's pull this up again. You remember I showed you this the other day? This was basically my drawing of what I did with Dow. Manipulation. That wick is the next candle entry. After the shift in price delivery, the following candle is also an NCE. Every candle is an NCE. Every candle. Every single candle. Look at it. If you're in a bearish market, remember the other day I told you almost every single candle will have an open high, low close. Okay? Some of them have lack of wicks, especially when you go to a smaller time frame. I'm not arguing against that. I'm not arguing against that. That's true. Okay? Just want to make this a little bit proportionate. Okay. So in a bearish market, right? Bearish afternoon, maybe it's a bearish week or a bearish day, whatever. this is what you should expect. Open high, trade lower, and then it might come off the close a little bit. Sometimes you'll have a close at the low, sure. Sometimes the close will be up here. Sometimes you'll have a fucking up candle, right? But watch this on a 5-minute time frame. Once that mitigation occurred, NCE here. This candle has no wick on the upside. All right, not a problem. This candle, next candle entry. There's equal lows here. London's low is here. I'm not really sure what's on a higher. This might be a gap. Oh, it's not. All right, not a big deal. I would say that's a PM session low, but we don't have to get into too many details. We'll go back to electronic. What I'm trying to portray to you is that this is an NCE, that's an NCE, that's an NCE, that one too. All of those you can short above the open. This one here, after such a significant move, it does become a little bit more riskier because it's already sold off. But think about it. Every single candle in here, even the up candles, all right, not perfect. But look at all the down candles. All the down candles. Even as I speak, it's still trading lower. Open, high, short, low, close. Does that make sense? Every price leg, it's not just, oh, I didn't short the imbalance and I'm like 2 points late. So yeah, fuck the move. It's going to run to the lows. I know that, John. But, you know, I was texting my girlfriend. I was doing this. I was watching your stream. I was fucking around. Okay. Just because you missed that doesn't mean you can't enter in one of the following candles. And why do you think the other day and last week, one of the two, if not both, we broke down the hour by 15-minute segments? Because that's the same thing. The smaller time frame you go, the more candles there's going to be. No shit. That's how math works. 60 minutes, there's 61-minute candles. Okay. I guess there's 6 10-minute candles. I'm not looking at that fucking chart. 4 15-minute candles. What is it? 35-minute candle? No, that can't be right. 20. What the fuck? How many 5-minute candles are in a 60-minute chart, chat? Obviously, I'm not awake yet. 12. Okay. That's a bad look, John. There's 12 5-minute candles. Okay? In every hour. And there's, you get it. 61-minute candles, 32-minute candles, 12 5-minute candles, 4 15-minute candlesticks in every hour. So this is why the 1 minute and 5-minute time frames, that's why the other day I said it's its own world. It is its own world. It's its own universe. And it wouldn't make sense to somebody that only looked at 1 hour time frames. Right? Because you might look at the 1 hour and go, oh, what is that? Well, yeah, on the 1 hour, it looks shit because it's only giving you 4 pieces of information. The open, high, low, and close of 1 hour time frame. There's a lot of shit that happens on a 1 hour time frame. What did we just go over? Let me back up. What did we just go over? Between 8:45 and around 12, so like 2 or 3 hours, a little over 3 hours, there was at least 8 opportunities to short. At least 8. And you're telling me you can't find one trade? You can't find one trade? Come on. What do you mean? If you miss a concept, wait for the next opening candle. Or wait for the open of the next candle. Okay? What do you think this is right here? You see this right here, 11.15? Comes all the way up, closes lower. Look at that wick up there. Oh, John, I missed that. Well, that right there is giving you an indication that it ain't fucking bullish no more. And it's going to run these lows now. We've already manipulated. We've already had a deep retracement. That was leg 1. The fuck you think this is? Leg 2. 11.15 closes. Okay. 11.30 opens, trades up. What's right here? That's the mitigation. Shorting above, the 15-minute candles open, sinks lower. And yeah, Jordan, the hourly open indicator changed the game for the 1-minute and 5-minute time frames, right? Exactly. That's why, and not all of them, but that's why some of the trades that I take, that I record and I show you guys, you're just like, what the fuck? You're just like, that's insane. Yeah, but imagine taking it. Imagine riding that wave of the day. Imagine catching a whole week, 5 days in a row on SPY. Look at that. And then Friday being a down. Come on, chat. All week higher, Friday's a reversal day. Come on. You already knew that was happening. You already knew that was happening. But imagine, I bought on Friday the 10th. So I did take a little bit of drawdown. But imagine catching the majority of that move. You wake up the next day, gap higher. You wake up the next day, gap higher. You wake up the next day, gap higher. You wake up the next day, you watch it hit your TP. Bro, it's not a daydream. Okay? It can be a daydream. And you can sit there and imagine it all you want. But I am literally teaching you how to do it. Do you understand that? Look at the same idea on this daily time frame. You knew I was bullish. On Monday or Tuesday of last week, you knew I was bullish. Oh, John said he bought the other day. He must be bullish. What other way of telling you I'm bullish than actually having a real trade on the table with real money, buying SPY? You got to put your money where your mouth is. Or whatever the saying is. Look at this price run here. From the low up to the high, okay? Same thing. Instead of expecting bearishness oh fuck, that looks terrible. Instead of expecting bearishness, so open, high, low, close. If we're bullish, we would expect open, low, high, close. Bullish, expansion, up, close candles. So what do we get? Now this is a down close candle. I'll give you that. But it still did what? Open, traded lower. That's a long. Comes off of it. Profitable. Open, low, high, close. That day on Thursday, okay, that was a down close day. All right. You may not have made money that day if you day traded. Okay. What about the next day? Open, low, high, close. That was an up close day. What about the next day? Open, low, high. The high was also the close. It rallied into the close. What about the next day? Open, low, high, close, still a green day. Thursday, open, small, low, high, and then sold off into the close. That's why I said in the Discord this week, good luck if you shorted. If you tried to short during a price run like this, that's why you're taking losing trades. That's why you get stopped out fast too, probably. Am I wrong, chat? You can let me know. You can type into the chat, John, you're wrong. You're a dumbass. You don't know what you're talking about. No, I shorted and made money. I'm not saying you can't. But I'm saying predominantly, if you short in a bullish market like this, you're asking for the market. You're asking to get clapped, is what I'm saying. But if you stick to being bullish, like Wednesday, that's how I caught that day's range. Buying in a bullish market, the lazy river mentality, right? Why would you go against the higher time frame if you know the higher time frame is going higher? So anyway, that'll be it for today. But let me scroll back into the chat just to see a few things. The trades that run straight to TP are very addicting. Yeah, no shit. Exactly. That's why I talk sometimes the way that I do. I mean, you see what I caught the days range on Wednesday and the whole fucking week on SPY. You don't think I can talk a little bit of shit? How do you think I feel? Making money trading. How do you think I feel? Come on. Feels fucking, it's the greatest shit ever. Making money pressing buttons. Come on. Oh, I feel like my patience when I'm in a trade got worse because of it. I told you that would happen. I told you once you get good, once you get that first 1 or 2 trades that do that, low drawdown straight to TP, it shocks you. You're like, oh my God, I just took the best trade of my life. It's worse than fucking crack. I wouldn't know. Never tried crack. I won't. But assuming if there was a comparison, it's worse than crack. It'll be you've been poisoned, basically. You've been poisoned. You've got the fever now. You've got what I got. You've got man, I need that whole bitch now. Welcome to the club. Pop said, I'll start a weekly study of hindsight. Of course. Every weekend study is hindsight. And that's not an issue. And sometimes be overwhelmed with all the information I find presented. Right. There's a lot of information. You got to sort through what's important and what's not important. If you watch one of John's videos a day, study/apply, you'll be surprised how much growth you'll see. Yeah, exactly. I appreciate that. Make it a 90-day challenge and repeat. Hard to fail unless you don't apply or don't take notes. Right. Oh, great question, MK. What's a combine? I'm not going to answer that. It's Top Step. It's a funded challenge through Top Step. They're the only ones that have combines, but everyone else is like a funded challenge. Okay, so great question. Is it okay if you stack entries, or is that bad risk management? My friend, I have a video on that. And since you are a member, you can go watch it. It's called the Market Maker Models Masterclass. And I teach about pyramiding. You can add your biggest, I'll give you a quick example. I know I'm going a little bit over my time today. I can go over or under, it really doesn't even matter. But let's say your biggest position, you want to be up here or up here. And then you can add on later with smaller positions. But you never want to go above initial 1 or 2% risk. If you're in from up here and you add in here, your average price is still going to be way up here. So you won't, be stopped out if you try to go break even. Highest position, or if you're short, highest positions above old highs, low risk shorts and shit like that. First stage and second stage you can add, but not the same. So if I let's say I'm long, short 5. Okay, if I short 5 up here, I can add 2 or 3 in here. Not a problem, because my majority position is going to be like up here still. 5 and then add 2 or maybe 3, or you could just add 1. I've done that. That's how I passed my first one. Not with the Nasdaq trade, but I took a different trade on ES, and it was something like where I was short 1, got a nice move, and then I saw the equal lows, and then I added on 1 more right before the move down. So I doubled my position. I didn't double my risk though, because my stop was at whatever, break even or something. So I didn't add risk, but I did add a contract though, right before the run on equal lows, which is cool, because you build a position when you're winning. You do not build a losing position. You never average down. You never average a loser. And you'll hear about that in 48 Laws of Trading. I forget which number it is, but one of them is losers add to losers. The law of the loser. And that's where this comes from. Or that's where that idea comes from, is this, what I just told you. So, how's that for a continued sneak peek in the 48 Laws of Trading? Drop a 48 in the chat if you guys are ready for that. I have not recorded it yet, but it's coming in February. If you guys are excited for the 48 laws of trading, drop a 48 in the chat. Okay, real quick before we hop off. I checked the poll. Did you know that MMXMs can be connected to each other? And I got about 49 votes, almost 50. 55% of you said yes. 45% of you said no. So that means 45% of you, 44% of you now learn something new. So that means 22 of you learned something new today. And I'm happy about that. That's what I'm here for. Teach you some new shit. You thought I was done. You thought I was finished. No. There's always something more to learn, bro. Now we can close it. All right. You got an AM session today. You can go rewatch that. You got a normal like PM, early PM session today. You got about 2.5 hours worth of stream today. So that'll be it, man. You guys be blessed. Have an amazing weekend. Next week is the last week of January. You know, last trading week of January. And we close out the month. And then we head it right into February. All right. So be blessed. Have a good weekend. Don't do anything stupid. All right. Don't do anything stupid. I'll see you Monday.